First of all, thank you very much for joining me today. Listen, I think that the most important part, before we even start talking about pet insurance, are you a cat person or a dog person?
Gotta be honest, I'm a dog person. We have Bailey. She's a 2-year-old Puchon, which is a Bichon and Poodle mixed breed. And I also have 3 girls. Yeah. And so Bailey is probably the best thing that we brought into the household for the girls and for the family. So I highly recommend it, but I would have to say a dog person.
Wait. So, first of all, that's check. We can continue this podcast. If you were a cat person, we'll just jump to a Q&A, yes, no, and just let you do your things in the litter. But a Puchon, I know there are so many doodles and labradoodles and whatever doodles. Every other dog is like, yes, and it's mixed with a poodle. What's a Puchon?
Poodle, that's the first
The
part,
P,
and
yeah.
Bichon Frise, which is the other breed there. Smaller, smarter, I would argue, and great with kids, hypoallergenic, so they don't shed as much, which my wife is very happy about. So that's Buchon.
Gotcha. Okay, no, that's awesome. Yeah, I think that finally that we recently moved to a house, so we moved from the apartment and everything. Most definitely, next thing on the list will bring a dog. However, like everything else in life, we have a few caveats, and one of them, let's wait another year that the baby will grow a little bit older, and then growing up with that kind of endless happiness that dogs bring. Right.
So let me tell you one thing on that. So somebody told me once that his parents, so just somebody I used to work with, his parents waited until he and his brother were teenagers before they
Oh no,
brought.
that's too much. No. I'm talking about
Exactly.
like 3 years old, 2 years old.
Absolutely, that's great. Don't wait too long, because then you get the your kid would have a few years with the pet, and then they'll go off to college or something else, and then I think they lose a lot of those great years with the dog or the cat. So the sooner the better.
Well, there are two elements there. Let's put aside the discipline, okay, your responsibility to take the dog out, because at the end of the day, it's going to fall on me, or on the mom, which really depends on the household. But it's more about it's your responsibility, but also the play and the fun and truly appreciating that endless love that a puppy brings. And this is what I have got.
Emotional, 100%. Emotional
Yeah, no.
support as well during not the best days for you or for your kids.
Mm-hmm.
Bailey is always there for them, and this is just beautiful. It's great. Highly recommended.
Highly recommended. Which is a beautiful segue to pet insurance. Pumpkin, Lior, please give us like the elevator page of what is Pumpkin Care.
Sure. Pumpkin is a pet insurance provider. We provide coverage for accidents and illnesses. We're live in all 50 states. Pet insurance generally covers for the unexpected vet costs that come from injuries or illnesses for your pet. Think about it as health insurance for your pet. Pumpkin is a 6-year-old company, so getting into kindergarten, I guess. We started in 2019, sponsored by a company called Zoetis, which is the world's largest animal pharmaceutical company, and got together a few founding team members and started Pumpkin, basically. Besides the pet insurance side, we're also providing wellness programs. So wellness is your coverage and support for routine care. So think about vaccinations and your checkups, your blood tests, etc., that you want to do on an annual basis, as well as some freebies and whatnot. And so that's
Mm-hmm.
another product that we have in the market, about 180 employees strong.
Oh,
Very
wow.
proud of our growth over the last couple of years. We're one of the fastest growing pet insurance brand in North America. Specifically to Pumpkin, we have a relatively broad coverage compared to some of our competitors. We pride ourselves on our service levels, innovative features we bring to market, and not surprisingly, we are the highest ranked pet insurance brand in North America on Google. So that tells a lot when it comes to customer reviews and appreciation.
Let's talk a little bit more about pet insurance because you talked about, life insurance, you have the pharmaceutical, you have the benefits, the wellness. When we think about wellness for people, right? You give them some sort of a wearable and it's just like, yeah, don't worry. Just follow the sleeping, the food, the calories, just be well, do your 10,000 steps, and that's kind of wellness. What's the difference? How does it break down in pet insurance?
Yeah,
Because you
no, it's
have
a great question. It's a great question. So I would say wellness in pet insurance is your expected routine care. So unlike unexpected, so injury or illness would fall under
under
the
health.
insurance side, exactly, and then the wellness side would be more of the things that you plan for, diagnostics, for example. You go once a year, get your blood check, etc.,
Mhm.
fecal tests. That is the wellness piece. Some pet insurance brands would have a wellness rider as part of their insurance policy. So it's going to be part of their insurance policy. With Pumpkin specifically, actually, it's a non insurance product that we sell either as an add on or a standalone product because it is complementary to the insurance side. One thing I would say is, and I think the data supports that, is when people invest, quote unquote, in wellness care, properly taking their pets to the vet once a year or twice a year for regular checkups, you avoid those higher expenses, more complicated things down the road because you took good care of the pet along the years, especially when they're young, leading to those later years in life where it's becoming more common to see more illnesses related to age.
I wonder if we can, well, we can use the analogy for car. I wonder if we can actually have that product. So basically, we are going to cover your 50,000, 50, 60, 100,000 miles driving, that kind of routine maintenance.
Yes,
But if you have a bumper to bumper, or God forbid, it's a different type of an accident, yeah, that's on you. And that will actually go to the insurance company. So that will be your insurance company, while this will be your wellness or maintenance, if you like to call it.
maintenance. Yeah.
So within the insurance, it divided to paying the vets, the pharmaceutical. You talked about that one of the pharmaceutical companies was your your first, if not are they the only investor, or were
They were
they
the main
the first,
investors
the main
initially in
investor
the
at the
early
beginning?
years. Yeah, since
Hmm.
then we brought on new investors, but yes.
Oh, that's
So
important.
pet
We can
insurance,
talk about that later. I'll be more than happy. People would, especially young entrepreneurs, will like say, "Yeah, we want a strategic investor. We have one. We don't want to look as if we like only one." And then how they work with a battery of different insurance players with there. But sorry, yeah,
yeah.
go ahead.
So pet insurance as a category is P&C, so property and casualty. Pets, in the eyes of I guess insurance law, is our property. So while it behaves like human insurance, it's actually structured as property and casualty. So it's a reimbursement model. You go to the vet, you pay for service, and then you go home and submit your claim and get paid for that claim after the fact, based on the insurance contract. So that's the structure of the insurance policy. You can have your expenses not only at the vet. So technically, right, if part of the treatment for your covered condition is getting medication, so you can buy those medications online and submit them for reimbursement as well. So that's definitely where I think you'd see the connection with pharmaceuticals or that. But remember that vets themselves sells a lot of pharmaceuticals. So you go to your vet and they prescribe medication, and then you buy that from the vet as well. So that's how those things come together.
Well, I think that also, yeah, we see that also on humans in terms of if we are let's not touch that. Let's stick to PNC and not touch health insurance. It's and all kinds of other scandals that we've seen in the past few years about how different doctors been pushing all kinds of different medications. Um, okay, so benefits. How big is the market?
Yeah, that's a
Because
great
we've
question.
seen so many new entrants into the pet insurance.
That's
Is
a
it
great question.
saturated already, or is there still room?
There's a lot of room. So that's the exciting part, I would say, as a participant in this market. So pet insurance in the US is about, call it just shy of $5 billion in GWP, gross written premium. And that's the NAFIA data. NAFIA is the North American Pet Insurance Association. It collects that type of data and it's publicly available. So about $5 billion in GWP. Let's call it in the US about six to 7 million pets insured. That represents about 4% of pets in the US.
That's
So
it.
when you ask me, is it saturated? The opposite, right? It is highly underpenetrated, if you will. And so there's a lot of room for growth. One reason I say it is I also look at Europe. And when you look at Europe, there are certain European countries that you see penetration rate in the 20, 30%. UK, Sweden is kind of good examples of that. And so there's definitely, if you look at the European side of the market, there's definitely more penetration there, which, I think just highlights the opportunity in the US and North American market. About 80% of pets insured are dogs and about 20% are cats. That's kind of how the market split, which actually is interesting. And you see a bigger and bigger share of cats in that market, going back to the earlier part of this
Cat person.
conversation, dog or cat person. So cats is an interesting topic because people tend to take cats to the vet less often, and hence their interest in buying pet insurance. But that is changing because the reality is cats needs they need vet care as much as dogs, and vets encourage obviously pet parents to take their cat to annual checkups and obviously treat things that come up. And so the market for cats, I think, is growing. Pumpkin, interestingly enough, since we started, has seen higher share of cats versus dog, about 30%. And I think that's due to kind of like our positioning in the market, our brand, and some of the other things we've done. But that's some of kind of the industry stats that I think are important. The last thing I would say is the industry grows at about 20% year over year from a premium perspective. So there's definitely a market opportunity, and I think we're growing into that opportunity over time.
What's the complexity there? Because a while back, we had I had on the podcast in the past, Dr. Steve something, and I apologize for forgetting the full name. That a few years ago, that was talking about pet insurance, and back then I did a small research about how it operates here in the US. And a few states, as you mentioned, it's PNC. A few of them you actually need to use part of a non-domestic farm um, animals and stuff like that. So it kind of falls under different buckets. And then there was a certain pattern that kind of limited a few entrants to take another step within that. And I
Yeah.
think that the patent should elapse in the next 2 or 3 years, something like that. Um, how the regulation complexity prevented you guys from operating or growing faster than you wanted?
So I would say regulation is I don't know if prevented us is the term I
Not
would
prevent.
use,
Yes,
but
yeah,
it's
no,
definitely a
that's
consideration. Definitely a consideration. Sometimes when people compare the U.S. market and the European market, they actually
mhm.
point to regulation and the complexity of dealing with 50 different states with 50 different ways of doing business, the need to get rate approvals, and so forth. And so that's definitely a limiting factor or makes things more difficult, especially as you try to innovate um, uh, with respect to your product itself. So product innovation, changes in coverage, changes in rates, changes in how you do underwriting. So I would say it's slowing you down, so to speak, but doesn't prevent you. So it's just a timing element there. But at the end of the day, we all have to abide by the regulation, and so you make it work,
Hmm.
in a sense. One thing that we've done on our side, that I explained earlier, with a wellness product, is it's non-insurance, so it allows us to innovate a bit faster and change things more rapidly, actually experiment and test and learn, do pilots and so forth. And so things that you can't necessarily do on the insurance side, at least not at the same pace, you can
Hmm.
you can do with some of your non-insurance products, or other features you want to bring to market.
And I think that that's a kind of a, gong or cue the vets and their kind of participation as the distribution. Can you compensate them? Because I see vets looking at, especially on the benefits elements, like, yeah, let's just get the pets coming in so we can give them care. And there is a in a sense, it's kind of vendor financing. Just come use our services so we can actually provide you with care to your pets. It's a win-win-win-win-win situation.
I fully agree. I fully agree. And so, to your question, we cannot compensate vets for sale of a policy, right? In order to be compensated for sale of a policy and to be licensed as an insurance producer, that's not something the vets are or interested in becoming. And so,
No.
but you're absolutely right. It has a tremendous benefit to vets that
Hmm.
their customers, are the pet parents that go see them, have insurance in two main ways. One, and we know that from research and data, pet parents with pet insurance would come more often to the vet, and they would say yes more often to recommended treatment. If you talk with clinics and vets, and we do that often, one of our key distribution channels and our ways to go to market is through the what we call the vet channel, and it's through the veterinarian recommendation. um, One of the key things we see in that space is that veterinarians, staff members, vet techs face the pressure from their customers with respect to pricing, with respect to costs. Clients often negotiate the type of treatments and how much things would cost, and that creates a lot of friction in the vet space. And so, insurance is one way to smooth that friction, because, as I said, if you have insurance, you're less likely to negotiate, less likely to try to maybe agree on a different type of treatment, which is not ideal for the pet from a medical standpoint. And so, in order to provide best care for pets,
Hmm.
and what we call on the pumpkin side, we want to promote uncompromising care. So we don't want pet parents and we don't want vets to compromise on the level of coverage and the level of treatment they're offering to their family members, pets. And so that's why we believe so much in the concept of insurance, why it helps both pet parents and the vets.
Is there a limit? Oh, once again, I'm using limit and stuff. In terms of the insurance, what type of pets are covered by the insurance or the wellness? Is it only dogs and cats or parrots?
So yeah, so for with Pumpkin, it's only dogs and cats. You do have insurance for other types of farm animals. So there's like a horse product they could buy in the market from a provider and whatnot. But let's call it the main pet insurance species. Yeah, that
The
you're
domestic
targeting is
species pets that we say, it's not like an
exactly.
iguana. Well, in Florida, they run wild, but it's not if your kid comes, hey, I have a tarantula. I want to get an insurance for it. Yeah,
I
we
think it's going to
know.
be difficult. Yeah.
Well, unless you're in Texas, then it's like, just go and pick a new one. It's like, no one is there. Oh, no, it's a very interesting field, and it comes. Why why is it so underpenetrated in the U.S. market? How come?
That's a great question. Yeah. So one thing is, I would say, regulation or compliance,
Uh-huh.
which is, again, I'm not an expert in the European market, but
Yeah,
feels
no. Let's
easier
focus
to
on this
deal with.
market. It's like, yeah.
Right. But the comparison is important because, again, they were able to get to, again 20, 30%.
Hmm.
So compliance and regulation, I think, is easier on that side. I think the ability to engage with the veterinarians and generally partners from a compensation standpoint is also more relaxed compared to the US. So the distributions can be a bit easier. Time in market. Pet insurance in the US is generally speaking a relatively
Yeah.
new product, called it 15, 20 years. It started earlier in
Hmm.
Europe, so that's also a time component there. And finally, I would say maybe the attitude towards non-mandatory insurance. I think in the US, right, it's not mandatory, it's optional. You don't have to get it, unlike car or home. And I think there's less interest in that. In general, if you compare the average European customer and the average American customer, I think the European customer is more risk averse in that sense. And so they are more likely to buy optional insurance coverage versus a US customer. But again, I would say in general, the the fact that the market is so underpenetrated and there needs to be so much education in the market about what is pet insurance, what are the benefits of pet insurance to both the pet parents and the vets. Again, I think the potential here is massive given obviously the size of the market here.
I'm so surprised, and I'm sorry for jumping back and forth on the same, which is more or less the same topic. It's like, what's pet insurance? What's the size of the market? Who are the competitors? What's the penetration? What's the growth rate? What's the CAGR for that? How come, the education? Is it a culture thing? The US versus Europe, which in Europe they actually have a liability insurance as well. It's like, let's say your dog just wrecked, well, not just bite someone or caused some sort of a physical harm, but actually caused, interrupted the traffic and caused an accident. Who is
Yeah.
liable for that? So, there, from the general liability to other things, it's a little bit, it's a little bit more developed at the same time, and kind of connecting it back to the vet. They are more or less the are they the main distribution channel and education about, hey, listen, you should get, well, benefits or wellness insurance. Are we defining the wellness insurance or just a program?
Not in the pumpkin case. Some insurance
Okay.
providers would have it as part of the insurance. On our case, it's non-insurance. To
Okay.
your point around the vets recommending, so that is our recommendation when we talk to
Hmm.
vets and we talk to clinics. First, we tell them, look, you want to bring up the topic of pet insurance with your clients, especially new clients that don't have appreciation of how much it would cost over the lifetime of the pet to get, to care for that pet. And so getting insurance earlier is important, right? Even before they develop certain conditions. So bringing up the topic of pet insurance, recommending that the pet parent would research pet insurance.
Oh, that's all.
We always
Yeah.
ask clinics or recommend to clinics, hey, just in your client onboarding,
Hmm.
just include that question, and who is your pet insurance? Just by asking the question in a market that is so underpenetrated, you bring to the surface the topic of pet insurance, and that's something that pet parents should, responsible pet parents that want to care for their pets, should research. And of course, as selfishly for Pumpkin, we want them to obviously research Pumpkin and get a better understanding of why and how we're different than some of the other providers out there.
Such a classic behavioral economics. Just bring that question. If you are the difference between asking the question and not asking, or having the checkbox already checked versus not checked, that you need to take the action to check it.
Yeah. I think one last thing maybe we can touch on is the economy. Overall, the things are more expensive these days, right? Inflation is real. That is also true for vet costs.
Hmm.
And actually, the inflation in veterinary care is higher than your regular inflation, almost two times. And so insurance, has to track those costs in pricing. And so you're in this dilemma, whereas you don't want to price people out of the market with respect to your premium, but you have to stay profitable, obviously, from an insurance standpoint, your loss ratio, etc. And so, from our perspective, how do you still bring value to consumers as prices inevitably would increase with care costs and whatnot. And one thing we're doing on our side is also innovating on the service side. So one feature we launched recently, we call it Pumpkin Now, which is
Hmm.
an urgent white glove service in urgent care moments. So if you go into your vet and you have a high ticket procedure, we would process your claim and pay you money in the bank within 15 minutes, even
Oh, wow.
before you pay your vet. So we're trying to minimize the time that the pet parent is out of pocket. Again, helping with that pressure and just the economic realities of today's economy. And so that's just an example of the things we're trying to bring to market to make it easier for pet parents and vets, again, to care for their pets.
No, I can see how that removes the economic pressure. It's you already in an emotional pressure, and
Yeah.
then you need also to deal. Oh my God, if they, God forbid, they need a surgery or something like that. Now I need to deal
Yeah.
with that type of trauma, and we all know dogs and cats that have been part of the family for many years, and they are just another family member, and they need to go into an emergency surgery, not things that kind of expected, which is different but still painful. How did COVID and the different fluctuation in pet ownership change and impact your business? Because we've seen a few fluctuation in the past few years. And also, we can add to that. At the beginning, we kind of joked about all the doodles and the poodles and etc. Are there any specific uh, types of dogs that are preferred now and things like that?
No, that's a great question. So first to the COVID point, yeah, I mean, look, COVID was a crazy surge, and Pumpkin, just for reference, we publicly launched on
Six.
April 2020.
Oh,
So a
wow.
month into the lockdown, right? So that was a crazy time to launch a business. What you saw is after, let's call it 3-4 months of lockdown and people trying to get used to this new reality, you saw a surge in pet adoption, crazy surge in pet adoption. And so you actually had a shortage in terms of supply of pets. So breeders and couldn't keep up with the demand. And every pet related business, I think, benefited from that during, let's call it 20 to 2022. Pet insurance is no different. So I would say from an industry growth perspective, we saw 35% growth rate during those years compared to, let's call it, the 20% regular. And so uh, that was definitely impactful and definitely interesting. Now, in terms of popular breeds, I mean, I think Golden Doodle around that time became
The main.
almost like the most common, the most popular breed out there, and we definitely see it in our book of business.
We talked about investors, strategic investors, and stuff like that. What can you share with us? Because there are a lot of founders that listen to this postcard, other investors, and there is always the question, hey, if I'll get this strategic investor or that company, how is that going to reflect? When we look at that in the P&C world, and especially with the activity of the CVCs, they're always, yeah, but if I'll take money from so and so ventures, it will look as if I'm just going to work with that specific carrier. And I need at least two of them so I can balance it up, and maybe I need a syndication and blah, 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 blah. How did you manage it? What was your approach?
So in the Pumpkin case, we had our initial strategic partner and sponsor, which was a pharmaceutical company, not even in insurance space,
Mm-hmm.
which was a very interesting dynamic. But at least what it allows us is to focus on building the business, growing the business, proving the business case without the need to chase capital in the market
Mm-hmm.
regularly. So that allows, just clear swim lane, go execute, focus less on raising capital. When so about 2-3 years into the journey, an investment firm from Europe took a majority stake in Pumpkin, and Zoetis, our previous sponsor, became a minority shareholder. That new investor has a carrier. So right now we're part of a construct with a carrier. It's almost like a full stack type of solution where our carrier is also an affiliated company. Look, there's pros and cons to it in terms of shopping around in the market for the best deal versus just working with somebody who's part of the portfolio. But I would say, again, from a focus standpoint and allowing you to just focus on the things that the MGA should focus on, building the market, acquiring customers, focusing on sales and marketing, on your distribution channels, on your service levels, and then worrying less on the carrier side of things and making sure the carrier does its job. But for me, it allowed for more focus and kind of like execution mindset.
This is great. It's not just, I will not define it as just get the money and start working, because that will degrade the effort here and the value that all the different parties in this deal are actually providing. The best analogy that I can think of, it's more about getting one of the reinsurers venture arm, because they would like to see, because the same with the pharmaceutical, the way that I see it, right? In reality, it can be something completely different, is that they want more risk. So the same that they want more pets getting treated and consuming pharmaceuticals, although it's going to move it by zero point 0.1 base points, even less, in terms of the market, but it helps.
Yeah, and I would add to that. Yeah, absolutely. And I would add to that, in terms of the pharmaceutical company, or generally any strategic investor in that case, there needs to be some sort of mutual benefit, right? Obviously to the startup, but also to the investor.
You need to have alignment. There is an
Exactly.
alignment. Reinsurers don't invest just in one MGA. They invest in many MGAs because they want to get more risk, more diversity of risk. And over the years, of course, with the loss ratio and that they are looking at, who has the better book, then they will double down, invest more, provide more capacity. But at the end of the day, can you seed and can you actually provide me good risk that I can consume?
Yep.
Yeah, wonderful. Leo, let's do that. Let me ask you the last question that I'm asking everyone on the show. What's your recommendation, a tip to some, I would say, when you just started your career or entering the insurance industry?
I would say probably experiment more, pilot more, and worry less about modeling every edge case possible.
How does it
I'd say
work?
there's
No, how does it work? Because how much can you experiment with insurance? There is, especially if you're an MGA, there are so many hoops that you need to jump and commit to at the beginning. And so when do you experiment?
Sure. So I could take an example. If you have a potential partnership with a distributor, but you're not sure about the economics, and it's very easy to get into, try to boil the ocean in terms of modeling every possible scenario. What I would recommend is go with a pilot, go with something that is maybe more limited in scope or time, so you can get some real data in the market. In the in our space, right? Acquisition cost is extremely important, and managing that cost is critical. And so my ability to actually measure acquisition costs or efficiencies, conversion rate, how effective or efficient that channel is something I can estimate, but it's going to be based on assumptions. The real data is the king here, right? And so from my perspective, experimenting more, piloting more, getting to the real data faster, so then you can extrapolate from actual hardcore data and make more meaningful bets in terms of partners, channels, features you want to bring to market, what converts better, what resonates more with consumers, what gets you better retention rates. Again, I could go on and on. And the other thing with piloting and experimenting is you move faster, and moving faster than the competition in many cases is everything. And so that would be a recommendation, for just any business out there, but definitely people who are
It's
just
such a
starting out.
different it's such a different mindset from if you are coming from e-commerce and stuff like that, that it's all about A/B testing, ABCDEF testing, and of course we are talking about run fast, move fast, fail faster, all that, which nowadays I'm less of an advocate of that, but it can work in e-commerce and other retail or that type of consumption, which you are kind of playing in retail via your different distribution channels. When it comes to insurance, there are things that, you should sit down, think, and model, apparently not model everything, right? You can't really model everything, but you need enough, especially when it comes to how do I do my underwriting, what's the actuary tables that I need, and how much money that needs to be done here. And there are all kinds of interesting conversation of what can be done better within that MGA structure, right? It's and I think that you hit the most important KPI, which is the customer acquisition cost. That will be, in my opinion, the death, and we see it still with the InsurTechs, the Gen 1 InsurTechs that went public. They are still dying on the customer cost of acquisition. It's and now their combined ratio, but that's because they are full carriers. But sorry.
Yeah, no, you're absolutely right. You're absolutely right. And look, there's a lot of similarities. If you think about e-commerce and retail and whatnot, to at least the MGA experience. I can't talk to the full stack carriers, but from an MGA perspective, acquire conversion rates, A/B testing, ABCDE testing, you name it, speed, execution, not just in terms of, I fully agree with what you said about
but
the
you cannot
profitability of the product.
You cannot change the product itself quickly.
Correct.
You can change the
messaging,
way,
the branding, correct. The channels, the partnerships, the service levels, the experience. There's a lot of things besides just the structure of the product that, at least from my perspective as an MGA, I have control of. So I'm focusing there.
Perfect. Wonderful. I think, and now we actually finally got to an interesting conversation, not just pet insurance. Do you need to pet them like this or a little bit here or like then the ears? No. Wonderful.
The belly.
The belly. It's all about, it's all about the belly. You always need to rub the belly. It's super important.
Absolutely.
Lior, it was a pleasure talking with you. Are we going to see you in Vegas at the ITC, InsurTech Connect?
I will do my best.
Still
working on it.
Still working. Perfect. In that case, I see you next time, or at Vegas or New York or in any one of these lovely locations.
Great. Thank you, Gilad.
Thank you.